And we are back discussing markets, that's the NSE. What happened in the month of October and how is this trickling down into the sentiment as well as activity expected in the month of November? If you are just joining us, we have been discussing Safaricom, the results, and also looking at the top gainers and top losers for the month of October. Ms. Stella Wambugu, who is a Senior Equities and Trading Associate at Standard Investment Bank, is helping us unpack this from their October report. Our graphics team will put up for us the top 10 movers for the month of October. Stella, you can walk us through this. Safaricom, of course, was the #1 mover in that month. Who was driving the movement here? Was it the foreigners buying? Was it the locals buying? What was happening there?
It was mainly the foreigners both ways. I would say there were equal buyers and sellers, but more on the buying side.
On the buying side.
Yeah. Again, when we look at Kenya as an investment destination, now that Safaricom is 60% of market cap, really, when you weigh your options and you want to invest in equities,
yes,
it comes up very strongly.
Okay.
So I know it has held steady between I think the lowest we've seen it maybe from August towards October, yes, has been between 29.85 and 30.
So it's just been holding steady there.
It's been holding steady there.
Okay.
And we did notice there was some local selling at some point.
Yes.
The profit taking, because I mean some of the local funds also did get in at fairly good prices.
Okay.
So when it was 25, 26, 27.
Okay,
so they're just trying to exit and try and see where they can get a better return.
Okay.
That is not in the equity market.
Okay, and I'm sure it was what was it, probably as a percentage of total volume, it must have been 50% or more.
Yes. Yeah. Safaricom was about 50% of turnover.
For that period.
Which is not surprising. It tends to oscillate between 40 and 50% of turnover in any
single month.
In any given month.
Okay.
Unless there's something fundamental that happens in the banking sector, then I do believe that's going to be the case for the unforeseeable future.
And the list doesn't change because from the top movers list we have Safaricom, KCB, Equity, EABL. I mean, from when I was in the market, it hasn't changed.
It has not
the same percentage.
Yes.
So, but what I find interesting is that in your report of Safaricom, KCB, Equity Bank, EABL, and Centum in that order, only Safaricom actually had positive net inflows, meaning that investors, the foreign investors were buyers, net buyers, whereas for the other 5 or so stocks, investors were net sellers of these counters. Is there any way you can help us understand what was happening there?
I think I will still go back to this year being a very interesting year for any investor because of COVID. I believe that most investors felt from a long-term view, which companies is going to benefit or rather ride the wave quite smoothly.
And this wave in Kenya never ends.
Exactly.
It's been storms gathering for the last 5 years.
Exactly. And Safaricom has proven to be one of the companies that can be able to withstand the storms as they come along.
But you know, let me just interject there, because we've always said that Safaricom can weather the storm considerably better than anybody else, which actually created a bias because we never thought that the numbers would be negative, at least once M-Pesa happened. The last time we saw a negative number was probably 8 years ago. It was just before the onset of M-Pesa or the penetration of M-Pesa. Yes. So anytime you're looking at the earnings chart, it's 8 years back, but then after that,
and then it goes all the way up.
So now we're coming back, you're like, okay, hold on, what's happening? But the question to you, Stella, is you look at different companies, you engage with both local and foreign investors. Earlier, you alluded to the element of the macroeconomic environment. Now, if Safaricom is a golden egg and it's down -6%, and even their guidance could be -7 to 10%, then what happens to the rest of the sector? And should you even be looking at the NSE at this point?
It's a very interesting question, Bile. And I do agree the results when we actually were, according to our research team, were in line with expectations.
Yes.
And as you correctly put it, it was mainly because of the M-Pesa being affected. and the transfer fees been waived for the better part of this year, and they're still waived.
Okay.
And at the beginning of the year, we did feel that Safaricom, yes, will be affected, but we did feel like they were a bit, the government was a bit lenient in terms of giving waivers as opposed to banks.
Okay.
So the impact was mainly felt by the banks, and that's why from price movement,
yes,
you see the banks are taking a hit compared to Safaricom.
Actually, the whole time Safaricom has been on an upward trajectory. Banks, it's been oscillating.
It's been oscillating here and there, especially after half-year numbers were out.
Okay.
But what we're seeing now is that Safaricom is also taking quite the hit, and your data, we expected data to help voice because now guys have been in the house. So the fact that it has a technology sort of element to it, we did feel, and I feel like, and I think, in my opinion, most investors were leaning into that. And I mean, if you compare it with also developed markets,
yes,
developed markets have taken, the technology stocks have
just
had a good run this year. Just
another one, yeah.
Exactly, and I feel like foreign investors also filtered the same sentiment from the developed markets
and sort of read through.
Yeah, into our market, and Safaricom being your technology stock to a certain extent,
fair enough.
Really did come out strongly, and that's why it's held steady this year.
Okay, so this is going to be a very interesting just to see how that sentiment morphs up, just because of what you've explained.
Yes.
So the other stocks in terms of the top movers list were your typical stocks, nothing exceptional there. But what I found very interesting is we had the likes of Absa Bank, Bamburi Cement, and Kengen make your top 10. Do you have a sense of who was driving this? Was it the foreigners? Was it the local? Where was demand coming from? Especially for Bamburi Cement, it hardly ever makes your top 10.
I know,
yes.
I know. I think it got to a point where Bamburi now became a bit attractive.
At 20 shillings.
At 20 shillings for investors. So when you look at your long-term play, you know, we're slowly getting adapted to COVID. Our government is really hell-bent in making sure that the economy continues in as much as there's COVID, and one of the industries that is to gain also from a political standpoint is your construction.
Okay.
So when you look at that sector in itself, who's there to gain? So Bamburi usually stands out.
All right.
And I would say they've not had a good run this past 2-3 years. But I believe now that we're slowly,
like the worst is sort of,
it's one of those companies that has been able to ride the wave, the cycle, the down cycle for the cement industry.
So it's something to look out for.
It's
I used to cover Bamburi, and I was looking at the revenues, and I was looking at it in the year 2011, forecasting for 5 years. The revenue hasn't changed. So then we had long-term growth, but that's a conversation for another day.
But it's something interesting, and I would say that it's worth looking at.
It's worth looking at. And what about the utilities? They kept coming up every week. There'd be volumes going through Kengen, volumes going through KPLC. Kengen did make up your top 10 list in terms of movers. What was happening with Kengen?
I believe there was a one-off block trade on it in the course of the month.
Yes.
Other than that, I think it was more of a strategic investor who decided, you know what,
this price makes sense.
It makes sense. I'm going to get in and wait, because it's one of those companies that I would say is a long-term play. Rather than a short-term play.
Yes. Okay. Let's switch your conversation as we're coming to the tail end. We normally collect monthly diaspora remittances, and I mean, we'll put that up, but I'm tempted to ask. So it's the foreigners that invest here, but this monthly diaspora remittance is always on a rise. Where do these funds go to? Would you know? Like, I've always been so curious because this number, it goes up, it comes down. I've seen like for the last couple of months it's been going down, and it was expected.
Yes.
But I'm always curious because you're saying that the market is foreign dominated. I mean, the dominance in terms of the foreign investors is considerably higher. But then there's a certain amount of money that keeps coming here in terms of diaspora remittances. I've always been very curious. Would you have a sense? I mean, if you don't have it, it's no pressure. But so where does this money go to?
I have. I really
we should explore. We should really explore because some of this money needs to find its way to equities, especially for long-term financing.
And I do agree with you. I know there's the families, the diaspora societies that want to invest in Kenya, but I'm not sure whether it filters through equities, and I think it's something that they can consider.
Needs to be explored.
So maybe they do send in, but to buy a plot of shamba somewhere.
It's not only a plot of shamba through your uncle.
Through your uncle, I know.
House.
Exactly.
So
it's an interesting element. You'd find, yes, it doesn't really get to our equities.
It doesn't get to equities.
Yeah.
Okay, so we've discussed equities, and I'll finish up by asking what your thoughts are on sentiment for this month of November and getting into December. But you also talked about fixed income. You said that the locals have been putting money there. Has been a flight to safety. I know the element of flight to safety was quite prone, especially at the onset of COVID-19. Has that continued to be the sentiment? In other words, Stella, especially for the foreigners, and you engage with them, are they more open to putting money in equities, or are they still preferring to wait for the primary treasury bill and treasury bond auctions at this point in time?
I believe that they're open now that there's some clarity on the direction of where most companies are going, how the economy is looking like, how globally there's some sort of settlement in a way, in as much as we're now starting to see some lockdowns coming through. And maybe that could be the reason why we saw some selling off, especially on banks.
Yes.
So whatever happens in the developed markets tends to filter through the local markets again, because foreigners control our market. So with the lockdowns, we already know the cycle. So there's the lockdown, and then we'll slowly ease into it. So who's going to benefit from it? So it's just one of those questions you have to. So there might be a continued, skewed sentiment into safer assets. Safer assets, and then maybe slowly now start coming back into equities.
All right. So then that brings me now possibly to the tail end of this conversation, because we've looked at what happened in October. We are second week of November, and you told us that the volumes that we saw in October were last seen in 2012. That's the last time we had such a low, which was 8 years ago, right?
Yeah.
We're also saying that the last time we saw a decline in earnings for the largest traded stock was probably 8 years ago. There have been different schools of thought. The market is trading at about 9.3 times price to earnings ratio, meaning it's attractive. But there's also a bias there because you're valuing it on the past. But COVID-19 has changed the future. So in other words, is it a good time to consider buying? Do you think volumes will continue weakening? And what should investors be doing today when it comes to equities?
I would say number one is to look for stocks that you can have a short-term play, because right now, as you correctly put it, there's a lot of uncertainty, right? So if you see, and at SIB we do alert investors on when you can buy or sell a stock, right? So once you see a stock has gone down to a certain level where you know it's a good price point to get in, you get in with a focus of let it get to a certain point,
then exit,
and then re-enter again. That would be one of my takeaways.
For that, that makes sense.
Yes.
So what
other
are your
than that, also look for dividend
paying stocks. I was about to ask you, what are your top stocks then? what are you as a house telling people to buy when it comes to either the dividend strategy or short-term trading opportunities? What are you seeing from where you sit?
I would say your equity and KCB have come off quite a bit. So at those prices, I would strongly recommend buying those two stocks.
All right.
As we wait for the third quarter numbers.
Okay.
I'm not seeing any changes or any negative, so to speak, price triggers for the banking sector, especially towards the tail end of this year.
Yes.
Most of the banks had already done their provisions, unless there's something the CBK will just wake up one day and decide to tell us that will affect the banking stocks. I think those prices at your equity at your 34 is an okay price. It's an okay level. Yeah. Okay. And your KCB, your 35 is also not bad.
It's okay.
Yes,
all right.
Yes.
Okay. Is there anything else? I mean, for speculators, for the retail speculators, this penny stocks, is there something there?
I haven't noted anything on the penny stocks.
Okay.
And again, that's something that we're trying to unpack.
Yes, it's so an interesting once I get speculating when you get it. Fantastic. Is there anything else that your report brought out that we possibly forgot to capture in today's show?
I think we covered everything.
Yes, we did. Thank you so much. Thank you so much for our time. I think we'll leave with our guests with the summary statistics just to give you a recap of what we were discussing. October was the worst month that Stella has seen in her analysis since the year 2012. And also, coincidentally, it's the year that Safaricom last reported a downside in terms of its earnings call. So I think what we've been doing today is just unpacking and saying, okay, fine, volumes are thinning, and you must pay attention to this because it could imply that the prices could come off a little bit more. Today's numbers from Safaricom is still something to look out for, just to understand how is the market interpreting this and what are the perceptions that are aligned towards this. That will be something that we are looking out for the week ahead. But from Stella's perspective, the end of the year is coming. Expect lower volumes, but she does see opportunities in some of the banking stocks, such as KCB and equity. I think the only caveat there is possibly look out for the numbers that we are all eagerly waiting to see as we come to the tail end of the year. There are opportunities. Be selective. You need to absolutely do your homework. But that's pretty much all that we had from our desk today. What are your thoughts when it comes to the NSE? Are you a buyer? Are you a seller? Or are you on the sidelines? In other words, what else can we do to help you make this decision at the right time? That's all we had for you today. Thank you for joining us. And please make a point to join us tomorrow at 2:30. We will also be unpacking the numbers from Safaricom from an analyst, and we are trying to see if we can gain access to Safaricom, the management team, to help us understand what are the key drivers and what are any risk factors to look out for in the second half of the year. That's all from our desk today. Thanks and good afternoon.